because I had to run out this morning to prepare the presentation. So if I have just keep something, I'll get back to my notes. As said, I come from the business model, from the business side, from a venture capital. I'm more working on the operations, but it's true that my partners, they are technical guys, and they love deep tech actually. So we invested in the past when the whole team came from a previous venture capital company where we used to invest in deep tech companies. So we had experience in semiconductors, in electricity, in many of the fields, and people developing hardware. So I was down there, as said, on the operation side, but I'll try to give you a bit of the perspective of a VC. VCs are already discovering hardware. What we've seen, and that's mainly prompted by the Internet of Things, which you know quite well. So what we've seen is that from Silicon Valley going to Europe, there's an increased an excitement for the deal flow coming from hardware companies. I would say that so what they are starting to say it's not looking at the lean startups or the sharing economies and the software models, but looking more on companies having really tech backing it. So on hardware companies, VCs are looking for scalable models, looking for more for B2B, and also looking on the patents that the company has. And then on the consumer electronic side, which is the other one, that we see that there's a trend, they're also looking on the marketing activities and how they are fostering the companies to reach the audience. Both in Europe and also basically in the States, you have a lot of accelerators, so people who is helping in the companies to foster. I just brought some of the European ones, the hardware in Berlin, Eco Machines in London, which is in Italy, and Built It in Estonia. Those are the main ones, but what we see is that most of the companies are reaching them to shorten the time to the market. On the investment side, hardware is starting to raise investment. That's mainly the trends in the States. But in Europe, what we had in the past is a lot of research centers, which gives you the strength that there should be more and more companies coming from the deep tech side. So we think that there's a good basis. What we've seen up to now is that mainly in the UK and in France, there's a lot of activity in terms of quantity and quality of the companies on hardware. You should expect Germany to be also following the trend because of their past on the industry and the automotive industry. But probably those guys are stick on the corporates because we haven't seen such a quantity flow into hardware. And what is quite interesting also in the split in Europe is that basically in the Nordic countries, there's also high quality on hardware companies. So the other thing that also helps on the VCs investing in hardware is that there's been exits and great M&A transactions in the past years. So companies like GoPro going public, and also Oculus, I think it was Facebook, and Nest and Dropcam being bought by Google helps the VCs to gather interest on the industry. And it's an industry that itself has another interest, that it's that basically you wouldn't expect so many M&As being from the same field, which happen more on the software side. But on the hardware side, there's a lot of cross-industry investment. So let's say, for instance, that maybe a sensors company can be interested for an insurance company because of gathering data. That's mainly because what they are basing their models to grow is on the data that they can be collecting on having this hardware in place. So investing in hardware is hard. Probably you know better than myself. There's a lot of things to be going on. I just put some of things like the logistics stuff, the shipping for the design as itself, also how you protect your IP. So there's a lot of things that you have to cover, being a difference from other industries. But also, apart from the tech side, there's also an important main issue that you have to consider. That is on the approach to market, how the go-to-market strategy, how your product market fit, and and how you're going to be delivering all different steps to gain retail channel or how you want to reach your audience. Someone was asking before of how and when we invest on each of the stages. That's something that I just got from another presentation. But actually, I would say that prototyping goes on the first stage. I just put basically which are the main key points where you can be. It just always goes like this. It's not just for this industry. Most of them they have these trends. So that you just get the finance, you just deliver something, and you can fall in the valley or just get to the next level. So when basically VCs invest is what you get some pre-sales orders, some traction in the market. And before that, I think that the other presentation is covering the crowdfunding, so I won't stand too much. But in our opinion, from the VC side, we don't rely so much on the data from crowdfunding campaigns because they can be tricky somehow. Some of the crowdfunding campaigns that can be working is because on the back of it there's some VC and they have been investing in PR or they have been putting a lot of money in the marketing, and that's how the crowdfunding campaign results. And also the other thing is that you can have a really good crowdfunding campaign, but afterwards, if your shipping doesn't reach on time, it can have a really bad customer experience that can be really negative. So it can backfire on your company. The other thing that's not for this industry is it's across all of the ones that we invest, but actually the experience matter in any of them. I would say that in hardware a lot. So when we value a company, we really value the whole team. If they're going to be capable of delivering, if they have experience on shipping, on logistics, on all these main pain points that you have in the industry. It's a way of shorten the proposal and how you reach a market, because in our experience also on hardware companies, it takes much more to deliver than in other industries. So the other thing that also impacts in the industry is being capital efficient. When you grow, there's a lot of working capital. You have to have stocks. You have to. So it's also something that we want to see when we value a company. That is basically how you're going to be financing your growth and how you're going to be financing your prototypes and all the different steps that you're facing. But it's not only hardware. What I've put in here is basically that's the next one, but as you know, VCs love the subscription models and kind of the enabled software companies. So creating a business model that helps you having recurring revenues helps a lot on convincing the venture capitalists. For that, you have to have already all your hardware, all your machines working for that. That will be kind of my questions when you reach VC. I just tried to put which are the main ones, but to be able to get the attraction of a venture capitalist, I would say that you have to already have traction, have a minimum of sales, have a business model, or at least gathering which is going to be this business model in the future. As I've put, there's a lot of things going on around the team and how they're going to be able to work and how you're going to be protecting, if possible, or which is the freedom to operate that you have, and how mainly barriers and which is the production and how you're going to be scaling. And I think that's it.